It's not easy finding value in the bond or the stock market nowadays, but maybe Scott Colyer from Advisors Asset Management can help me. Welcome, Scott.
Thank you.
All right, let's start off with the bond market. Fed's keeping rates low. We heard that from Janet Yellen and Ben Bernanke last night. So where can you find some value in the bond market if there is any?
It's a tough place to find value. There's a lot of what we call duration risk out there. People understanding that the Fed's going to drive rates higher at some point in time. We just don't know when. It might not even be during my lifetime after listening to Ben. At the end of the day, the Fed is trying to create inflation. They're trying to raise inflation expectations. In fact, if you listen to Bullard, they're frustrated because they haven't been able to do it. So they're doing everything they can to create a little bit of inflation expectation, which is not good for interest rates. That means interest rates go up. Inflation and interest rates are positively correlated, and inflation is a bond owner's worst nightmare. So right now, people are trying to keep their duration very short, and there's not a lot of yield in the short part of that market. In fact, there's probably more risk than there is yield. We are finding some success in places like high yield. High yield and corporate credit tends to be a good place to hunt. Another good place to hunt right now is municipal credit. If you like tax-exempt interest, that's been a good place. That's kind of every time you have a Detroit or you have a Puerto Rico in the news, that market tends to become a little unhinged, and there's quite a bit of value that you can get there. But other than that, I would suggest that maybe there's better places to hunt.
Well, maybe one of those places in the stock market. Although we're hitting new highs, you do think there's some value there in a few names. One of those is Freeport-McMoRan.
I do, we tend to be contrarian, value types of people, which the resources stocks have not necessarily been on fire this year. Third quarter, we actually saw them what we consider bottom. We like Freeport because not only is it a copper play, not only is it a gold play, but as of June, it became an oil and gas play as well when Freeport closed its purchases for McMoRan Energy and Plains Energy. So now what you have is kind of a well-rounded global natural resource provider, and it's very levered to Asia. So if you have any type of recovery in China, which we're getting good numbers out of China right now, that copper market tends to lead, and that would be, we think, a good place to be. And then finally, there's been a lot of insider buying in Freeport-McMoRan. And these are big checks from like the chairman of the board, almost 5 million shares between the chairman and the president, CEO of the company, which is also the vice chairman, since that closing in June. As well as last week we learned that people like Leon Cooperman and Omega Fund, about 2.8 million shares acquired in third quarter. David Tepper at Appaloosa Management, 1.7 million shares acquired. It looks like a good place to be, even at levels that the stock is selling for right now. It's not expensive, about 12.9 times earnings. Dividends over 3%, growing nicely. We think it's a good place to be.
All right, there's some value in the stock market, and you say high yield for the bond market, right?
Correct.
All right, thanks a lot, Scott Colyer. And thank you for watching The Street. Please come back.